Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
And welcome to the Investor Coaching Show. I'm Paul Winkler, talking money and investing and teaching along the way. That's what we do around here. And today will be no exception. Lots of news out there. I probably should get to it because I don't have all the time in the world, so I can make sure I get to some of this stuff. Okay, so one of the things that I was talking about in a previous week, I got into a conversation about stablecoin. And this is something before the bill came through. I was just talking about, what is this thing? People are talking about it as an investment. I'm calling nonsense. You know, there are types of stablecoin. And a lot of people don't recognize that there is different types of stablecoin out there. You know, there's a Fiat-Based or fiat collateralized. And that was really what I was talking about. You know, the idea that you have fiat currency. And the dollar would be a fiat currency. In other words, it's not backed by anything solid. It used to be that the dollar was backed by gold, right? And, you know, now it's not backed by really anything. And you have the Federal Reserve and you have different banks. You have centralized banks all over the world that actually control the currency of various countries. And, you know, in the United States, they have a dual purpose, full employment, and you know, keeping the unemployment rate, you know, from going and skyrocketing, and inflation. You know, those are the two things. The dual mandate of the Federal Reserve is to make sure those things stay in check. That's why people are so adamant that they stay independent, right? Because you could have a situation where you have a president comes in and says, hey, I want interest rates to be low, so the economy takes off. And then after they get reelected, and then all of a sudden, you know, it's a heck in a handbasket. I don't care what interest rates do after that. And you could have these wild swings because they're using it for their political purposes. So that's the reason there's such an issue with this. Now, the idea behind fiat collateralized stable coins is that you have, let's say, the US dollar, that's the collateral. Now, what's going on right now is the idea is we're going to have this stable coin. And I said, you know, and I was talking about how, you know, where do these companies make money? You know, issuing stable coin. Well, they make money in that when they issue a stable coin, it's backed by treasuries. So this is something that our government kind of sort of likes, because, you know, if we want interest rates to be lower, and we want the dollar to be the king, we want the dollar to be something that everybody wants. If we can create a demand for the dollar, so much the better. You know, like if we look around the world, we have different countries and they have currencies that aren't terribly stable. What if they had some access or some ability to piggyback off of our dollar? Now, that would be good for them, right? But it would also be good for us because we like a strong dollar, because when you have a strong dollar, you can buy more things on the cheap. And I use that example of my father when I was a kid. He would travel the world. And Dad was a navigator. And what Dad would do is he'd go all around the world and he'd buy some really cool things. And the reason he was able to buy it so cheap was because the dollar was so strong. You know, you go back to the 1970s and the 80s, and that was a big deal. You could do that. I mean, we got some serious. I mean, you got to see some of this furniture, my hand carved. I mean, crazy stuff that my father got for a song and a dance, and electronics, those types of things. So you know, that was a really big deal. Well, if we can have a dollar that is held strong, it's I think of who is it? I'm drawing a blank. I can't think of the economist. Larry. Oh gosh, I should be able to think of that. But anyway, you have these economists that just love the idea that you have a strong dollar, and that would be really good. And also, if you have a demand for the dollar, if you have a demand for treasuries that is created because a stable coin has to be backed by treasuries, then you have a ready market or people wanting to buy treasuries. And when you have a ready market for people wanting to buy treasuries, that can drive interest rates down, which can help with the national debt, right? So there are a lot of reasons that this is super, super popular. Now, from a standpoint of somebody that is looking at buying these things as an investment, the question is, does that make any sense? And, there was actually an article in MarketWatch, and I was like, bravo, MarketWatch, Wall Street Journal publication. And they were talking about how Bitcoin, it's just like, you don't want to use that as a currency. And it says, by contrast, I'll just read part of the article for you. It says, by contrast, the value of one Bitcoin was $118,828 on Thursday afternoon. Its value in a 52-week range veered from roughly $49,000 to $123,000. Big jumps are a reason it's daunting to pay for everyday goods with Bitcoin. In 2010, a software developer paid 10,000 Bitcoin for 2 pizzas, an eye-watering overpayment for food. And had he known Bitcoin's future value, probably wouldn't have done that, right? And that's the problem. And I look at, on the other hand, Elon Musk didn't like the idea of selling a car and all of a sudden the value of Bitcoin drops in value. That's why it's never made a really good currency. It's just a speculative thing. There's no cost of capital like I talked about. You don't have anybody paying to use your money. Now, it says, what's the point of stablecoins right now and how can everyday people use them? Stablecoin is supposed to track the volatility associated with other types of cryptocurrency. So why hold these steady tokens if it isn't about the chance of profiting from wild swings? In other words, if this thing isn't going to fluctuate in value and go up and down, and you won't be able to get lucky and buy it at a low price and sell it later to somebody for a higher price, then what's the attraction? It says stablecoins allow fast payments and access to the US dollar across the globe, all without a bank account. That's my point. That was the point I made. Well, when I was talking about this, I said, how did they make money on this thing? Well, when they create a cryptocurrency like this, a stablecoin, they buy the treasuries. What do treasuries pay? They pay interest. Now, if it's short-term treasuries, it's through what I talked about a little bit earlier. It's the idea that you buy it at a discount, but you're still getting interest payments. Now, what is in the new legislation? And I didn't see the legislation when I said this. It was just, it's got to be it. It's got to be it. And indeed it is. That they cannot pay interest. They cannot pay interest, was what I read. Now, what is the point of making this stablecoin? If I make a stablecoin and you buy it, you put $100,000 in it, and a year later, what do you get back? $100,000. What was your interest payment? 0, right? Why? Because it's stable. And what did they get? Well, they got the interest because they actually bought those treasuries. So that is why there is an incentive for them to make this thing, right? Well, somebody said, dude, please do not comment on things you don't have the full picture. Stablecoin is indeed stable and pegged to us or any other currency, but stablecoin by itself is not yield-generating asset to all other currencies. However, it's like, I don't know what this person is actually even arguing with me on. However, the stablecoins are opening a lot of possibilities for decentralized finance to generate yield from your stablecoin. No, it doesn't create yield. That was the point. That's what's in the new law. It doesn't. Maybe that's what he's arguing about. I don't know. It's just, to me, you look at that and go, it's not an investment, but you're hearing too many people talk about it as an quote-unquote investment. Now, there are other types of stablecoins. That was not addressed. This is not what they're talking about. Now, algorithmic stablecoins, that was one of the things where people got ripped off. They got taken advantage of. And, that is one of those things I say, stay the heck away from anything like that. And to me, they got commodity-backed stablecoins. Where commodity-backed stablecoins, they're pegged to a value like gold or silver. Again, I'd stay the heck away from that because remember, it's not an investment. Gold, silver, it's not an investment. They may peg it to that. They may make it easy for you if you're a speculator, you want to try to get lucky and buy gold at a lower price than you can sell it for later on in the future. Yeah, sure. Financial people will make up anything. They'll come up with any kind of product that you will buy. and recognizing that there'll be some way that they're going to make money on this thing. I haven't even read how they make money on the ones backed by some kind of a commodity. I haven't even read that, but there's going to be something. There's going to be some way that they make money. It's like when you buy silver, they buy it for a price and they mark it up and they sell it to you. That's how they make money. So there's something in there. But the Genius Act, they said it's ushered in a new era for stablecoins, and what it means for Americans' wallets is, nothing as far as, how to make money as an investment. It's all in the financial system. And that's why everybody's been watching the banks so closely over the past couple of weeks. They've been watching bank stocks and watching how the banks are responding to this, because the banks are the middle person right now when it comes to you and your money. Payment systems. And as they talk about, you have people that actually have checking accounts or people that don't have checking accounts. They don't have ways of doing that. So that's the idea. If we look at this now, let me hit a couple of these. I'm just looking at a couple of these segments that I had recorded this week. I think there might be some interesting stuff to comment right here. But this is the new legislation talk.
President Trump is set to sign the Genius Act into law later today. The crypto legislation passed the House with bipartisan support, along with 2 other pieces of crypto legislation. Joining us now, Summer Mersinger, CEO of the Blockchain Association. She previously served as a commissioner at the CFTC, nominated by former President Biden, and she will be at the bill signing at the White House this afternoon. Summer, great to have you with us.
Thanks for having me on the show.
3 pieces of legislation. The Genius Act really moved the markets. I'm wondering, Summer, how you envision stable coins and that industry evolving. Now-
No, it's interesting. It moved markets. What I was watching were the prices of the stocks of the companies that issue this stuff, moving them in a positive manner for most of them.
Now that there will be regulatory guardrails that are necessary.
Now, you talk about regulatory guardrails. And as we've talked about here on the show before, isn't it interesting? The thing that made a lot of these cryptos very, very exciting to people is the idea that there weren't regulations. It was, you're kind of going against the system to some extent. And yet now here we are with all kinds of regulations.
In order to guide the growth of the industry.
Yeah, absolutely. I think you'll just continue to see this industry grow. The guardrails provide the customer protections that were needed to ensure that those who want to be invested in this space have the protection.
And right there, invested in this space. Stablecoin is not an investment if it is the type that I'm talking about, backed by treasuries, where it's stable. Stable means no growth.
In place that they need, and really
But I agree with their point. The idea being that you need guardrails. You need to make sure if you're somebody from another country wanting to buy or sell or use this as a way or a means of payment, it would be nice to know that there's a government that's going to stand behind you. That's why I've always said the rule of law is the most beautiful thing, and that you have people that don't know you from Adam protecting your right to own property, whether it be a house, whether it be a car, whether it be whatever.
We're seeing is a dollar dominance with stablecoins that will continue, and
that's it right there, the dollar dominance, as I talked about.
We're going to fulfill the president's wish of making the United States the crypto capital of the world.
And that is really why it is so important, because of that dollar dominance. Now, so what would be stablecoins' use?
I'm curious, Summer, as to how you think this fits into the traditional banking landscape, insofar as having more stable coins will enable people to do cross-border money transfers more easily and more quickly, payment settlement to vendors much more quickly and cheaply. And obviously that takes away from the bank's role in this. The Bank of America, the Citigroup, as well as the JP Morgan CEO all spoke about how their businesses could face some disruption in the long term from stablecoins.
See, that is right on. That is why this is important. People are getting sidetracked when they're talking about it as an investment, but that right there is the real benefit in my mind. Anything you can do to get rid of friction in the economy, get rid of friction in the payment system, And that's really the benefit of this right there.
I see stablecoins as a bridge to traditional finance. I think it's only going to make financial services more accessible, more convenient, and those are all good things for the financial industry. So I really see this as a technology that's going to be well integrated into our current financial system and really take us into the next century with financial services.
That's what I've always said.
How do you see this industry involved?
I've always said that the big deal is the blockchain, that the technology that has come out of this has been the big deal.
Evolving, and in recent months we've had reports about, for instance, Amazon and Walmart creating their own stable coins for use. Are we going to live in a land where we're going to have companies operating with their own stable coins? And how much interoperability will there be, do you think?
I think that just demonstrates the excitement around the technology that underlines these assets. There's a lot of opportunity, not just with stablecoins, but with blockchain technology generally. So I think what we're seeing is, commercial interest in the technology, in the tokens, and it just it represents how exciting this technology is for the economy.
And that's really it. It is something that can be very, very beneficial. Anything you can do to get rid of friction. You have something called the velocity of money. And velocity of money is a drag. When you have anything like taxation or additional expenses, it is a drag and it actually can negatively impact the economy. So that's really what this is about. As far as, is it all exciting? And then you'll hear people that come out of the woodwork that are trying to sell you something. I'm just telling you, just go, okay, thank you, no. I get it. It is a good thing. It's not a good thing as an investment.
Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.